Hi, I'm Scott Hoppy, and we're going to talk about the free 20% deduction that business owners can get from their income under the Trump tax law. And it's a huge benefit, it's a big opportunity, but there's a tax trap built into it. And that trap happens at one of two numbers. The magic numbers are $315,000 for married filing jointly in people and $157,000 500 if you're single or married filing separately. And what those magic numbers represent is the beginning of the tax trap. And the tax trap is the spot where when you start making more than $315,000, you lose that 20% deduction, that free deduction. And when you start losing it, you're getting penalized. You're getting taxed really heavily on that money. So what we want to do is either keep you under 315,000, or we really want to blow out your income and make well over 415,000. If you make between 315 and 415, you're right in the middle of the tax trap. It's the worst spot to be. So let's take a look at an example. Joey's a software engineer. He's married, 51 years old, and a California resident. His business is formed as an LLC, and he is the sole owner. In 2018, he made $375,000, had expenses of $75,000, and reports net income of $300,000. 300's under that magic number of 315. So he would get a $60,000 deduction. That 20% special business deduction. He's going to get $60,000, 20% of 300, for free for doing nothing at all. He didn't have to spend anything, and his total tax is $90,000. That's the IRS, that's self-employment tax, that's California tax, that's LLC fees. So roughly gets you to 30%. But now let's look at Joey if he's over the limit. So now same facts, but Joey made 700,000. He has expenses of 139,000. So now he has a net income of 561,000. Since he's over that $315,000, he would not get the QBI deduction. So now his total tax is $214,000, nearly 215, and he has a tax rate of 38%. So Joey went from having the deduction to losing the deduction, and it happened because he went over that magic number of 315,000. And so what we want to look at is, well, what can we do to keep you under that limit? And we do have some tools. There's a lot of opportunity there because a business owner, the main thing you can do is you can control income and expenses. So this is what we do with our clients when we're looking at it. We're managing your brackets. So something we'd be exploring is equipment you need to get, like new computer refresh of your computers. I'm not a proponent of buying stuff to buy stuff, but in this case, if you have to get them, it may make sense to get them this year than next year. Another opportunity is using defined contribution plans. Like Joey, he's the sole owner, and he's over 50, so we could probably do something like $61,000 to his 401k. Setting up a defined benefit plan has huge deductions. That's also like a pension plan, and a lot of opportunity there, but it's expensive, and you got to know what you're trying to accomplish with it. But it could be very beneficial. We could also play the brackets. So if you have kids, move income from your high tax bracket down to your kids' low tax bracket. In this case, if you can pay your kids $12,000 a year for helping out in the business, there's a standard deduction of $12,000. They would get that money entirely tax-free. If you took $12,000 out of the business, you're only going to net out $6,000 after taxes. So as a family unit, you make a heck of a lot more money and pay a lot less tax overall with this strategy. And then the other item is like entity selection. Should you be an S corp or something like that? We can explore that more in a different presentation, or if you just want to message us. But now let's just look at Joey's example again. This time we're going to manage the expenses. So same facts as before. Joey made 700,000, business commenced of 139, but now he also did a 401k and a defined benefits plan. His total deductions from both of those was $261,000. We did $61,000 to 401k, $200,000 to the defined benefits plan. That reduces income back to $300,000, and now he's again going to get the extra benefit of $60,000 deduction for free. So in this example, Joey put $261,000 right back into his pockets, and he avoided a nearly 50% tax rate, which would have cost him over $120,000 in taxes alone. But now he got that money and it's in his pockets and he can use it later. It's in his retirement. It's his. Huge opportunities there. And he also got back his $60,000 free deduction, and he didn't have to spend a dollar extra. He put everything in his pockets and got more benefit. If you have a question about this entity selection or anything else, just message Scott Y Blue, and I'd love to talk with you, set you up with our strategy on entity selection, entity management. But the main thing you want to know from this is, are you a service business and subject to that $315,000 limit or the magic number? Do you know what entity you are, if you're in the best entity? And how are you managing your expenses to be under the magic number? Have a nice day and talk to you soon. Bye-bye.